tech-enabled third-party logistics company Shadowfax Technology is coming up with its IPO. And joining me to talk more about that is Abhishek Bansal, who is the founder and CEO of Shadowfax Technology. Thank you for joining us on NDTV Profit.
Thank you for having me here.
Abhishek, I want to start by asking you that the company started off with food delivery, and now it's gone into last mile delivery. Now, how do you think the next phase of growth? Which of the segments will be bringing in the next phase of growth?
Our whole idea is to ensure that digital penetration happens in our country. Today, only about 7-8% of our retail sales happen online. Our market study partner says that by FY30, 13 to 14% of the sales are going to happen online. When we look at that sector, or when we look at our overall retail spends in detail, you will realize that apparel and grocery are some of the most underpenetrated segments in our country. We foresee that apparel and grocery to continue driving growth for us, and some of our solutions around speed, around low-cost delivery are going to be the key drivers of this digital penetration.
Okay. Now your IPO is of 1,907 crore with a mix of fresh issue and of sale. Now, would you tell us more details about how will the proceeds be used, and will it be for tech expansion or for infrastructure development?
Yeah. So we have a total 1,000 crores of primary issue. About 45% of that is going to go into capex investments in automating our facilities, in setting up new facilities, expanding capacity for the future growth. We have a belief that over the next few years, our growth will continue to remain really, really healthy. Between FY23 to FY25, we were growing at about 32.5% CAGR. This year, in the first half, we have grown 68% CAGR, or 68% year on year. So our view is that our healthy growth is going to continue, and that is why some of these capex enhancements are going to really fast track and make us reliable and more customer oriented. Regarding the remaining spends, we plan to rapidly invest into direct to consumer brands. Businesses like ours are built with anchor customers, but once you have matured with anchor customers in every geography, that is when you start acquiring smaller sellers, smaller brands. We will continue seeing very high growth pace on these D2C brands and smaller sellers. It's growing at a triple digit base right now. We foresee the next few years we'll continue investing in sales teams, going deeper into the reaches of our country, and ensuring we create unique platforms, unique models to deliver on this growth with the newer customer base.
So Abhishek, you were just talking about the financials. Now, if you see the company's EBITDA has done well in the first half of FY26, but which was not the case in FY23, where there were losses also seen. Now, going forward, how can the investors expect the growth trajectory of the company? How will you make sure that profits are coming in?
As we continue expanding into our existing network, we are seeing a lot of operating leverage with our trucks getting better utilized, with our routes on the delivery partner side getting better number of orders per route. We see this operating leverage to come into play as we continue expanding, our cost to significantly shrink, and that will have a direct impact and improvement in our EBITDA line. If you look at some of the global peers, mature businesses make very, very healthy EBITDA level margins in our business. Second thing which drives a lot of our profitability, even for the future, is continuous investment into value-added services. We are the leaders in reverse logistics in India. We are the leaders in doing same-day delivery and some of these hyper-local models. Innovating these deeply rooted models is becoming a big USP for us, and that is something which helps us command a premium pricing versus our competition.
So now with the labor codes coming in and a lot of disruption in the gig worker space as well, how do you see that will affect your business, and if so, how are you building your business to be resilient to these shock factors?
So, we have been growing at 68% year on year in the first half. We have seen a very healthy growth trajectory in the Q3 as well. We have not seen any significant impact, or rather any impact in our business operations. What we foresee with the new gig labor code that is coming out, it is actually going to be a big boom for our industry, because now workers will be protected under the new gig law. There will be social security benefits which are more government linked. There will be standardization around our sector. We foresee more number of people to enter into this sector, given the lucrative working opportunities, given the ease of making money into our sector. we do not foresee any impact on our business in the midterm or the long term on this.
Okay. And how do you see your unit economics and delivery cost evolve? How have they evolved over the years, and how do you see them going forward?
Well, our unit economics have rapidly evolved, as you would see in our operating margin, as you would see in our EBITDA numbers as well. We have seen a lot of operating leverage on our fixed cost, on our trucking cost, and even on the delivery partner cost, which seems like a very variabilized sort of cost. Even on that, we have seen huge amount of operating leverage coming in, and that's the reason why we have been turning profitable and operating in the green segment.
Okay, now talking about some of the risks, so how do you see this, the competition from other logistic players like Express B and, Delivery? How do you see that? And also a lot of quick commerce companies now are having their own logistics companies, logistic wings being built up. So how do you see these two risks, and how do you sort of plan to, manage this?
See, in our industry, it's not a winner-take-all market. In every market that you will look at, there are multiple logistics companies that operate and coexist together. In India, the story is not too different, primarily because businesses which work with us, they essentially want to work with multiple partners. They don't want to put over-dependence on a single partner. So it's a very healthy ecosystem. For us to stay competitive, we need to continue innovating. We need to continue creating value for our businesses, and that is something that we have done. In a hyper-competitive environment, we have been growing at 32.5% CAGR for the last 2-3 years, and this year we have seen an explosive growth thanks to the demand and some of the other elements like quick commerce in this industry. Quick commerce is a great boom. Historically, all quick commerce companies, all food delivery companies had captive arms. We have seen over the last couple of years, they started to outsource more and more to players like us as they focus on profitability, as they also try to diversify from a single channel of fulfillment to having 3PLs fulfill their businesses as well. While they are outsourcing, they don't lose any strategic capability. They give a certain percentage of the business to companies like us to ensure that they are able to deliver at the right SLA promise and at the right cost. At the end of the day, if you have to be in logistics, you have to have the right value and the right pricing structure to essentially attract customers and make this model out.
Yeah, talking about the customers, now how do you sort of retain your customers, and how sticky are your top customers, and what does the line look like?
So, see, I mean, over the last probably 5 years, if you talk about the top 20 to 50 customers, every single customer has grown with us in terms of market share. We have not lost a single customer in our journey in doing that. Logistics businesses are extremely sticky, especially businesses like ours, where we do a lot of value-added services. Think about a business like reverse logistics, where it takes about 2 quarters to integrate with a platform like ours. Today, we integrate with the client level SKU, because when we go to your doorstep, when we pick up that order, we have to do doorstep quality check. We have to check whether the color is the same, whether the size is the same, whether the brand is real or not. To do that, you have to deeply embed yourself on the platform, and these are very, very sticky businesses. And as I said, we have never lost a customer. We have not lost market share in the last 3 to 5 years across our top customers. So that says a lot about the resilience of the customer base we have.
And anything particularly you do to retain your customers?
I mean, we really embed deep into the customer strategy. We continue to innovate, come up with multiple services. So our strategy to work with our customers is that on an average, we will engage a customer in about 3 to 5 different service lines, be it forward logistics, be it reverse logistics, be it critical logistics, be it store to end customer, omni-channel sort of model. We are the only platform in this country where essentially there is a portfolio of services. If you are a business, if you are a brand, you will end up working with Shadowfax, not just in one service, but a different portfolio of services. And this is a very unique sort of a strategy that Shadowfax took to, again, create a differentiator in the market, focused on value-added services, focused on the right pricing, and focused on this multi-category sort of integration with our customers.
Lastly, what's your vision for the company in the next 5 years? What can the investors expect?
See, from a vision, we want to power the digital penetration in this country. Today, only about 7-8% of the sales happen online. We want to power the next set of growth. We don't know where the next set of growth is going to come by. is it only going to be e-commerce? It's going to be quick commerce, or maybe, who knows, it can be video commerce as well. Today, India has the largest consumption of reels in the world. Like China, India might start very soon start only ordering from video commerce, where instant delivery is the key. One thing I can tell you, if anything is getting delivered to somebody's doorstep, we will be the first ones to power that. We powered quick commerce when it came in India. We were the first ones and are the largest players of quick commerce around it. So we have a huge paranoia of innovation. We will continue powering that digital penetration. We believe that we'll have a massive market share. We'll probably be the leading player in this segment, doing fulfillment. We'll have the most efficient last mile and the fulfillment experience today that some of these digital companies will need.
Thank you so much for speaking to NDTV Profit, Abhishek.
Thank you for having me here.